All right, so let's talk about Unity. They reported earnings last week. Stock crashed 37% after earnings at one point. Then it rebounded around 30% or so in the next 2 days. Overall, last week it's still down 30%. Now, what exactly happened? Were the numbers extremely bad that it granted a 37% crash? Was the company just overvaluated going into the print? Or maybe guidance was horrible and the company is just deteriorating? So I'll just answer all of these questions right now. Quarter was okay, guidance was reduced, and we all know what happens when that is announced. Stock crashed. Now again, doesn't mean that it should crash 37% or so. That's also why you saw a 30% bounce in the next 2 days. So why did it drop so heavily? Why did they lower guidance? And that's because of this. Two faults on their part. The first one is a fault in their platform that resulted in reduced accuracy for their audience pinpointer tool, a revenue expensive issue given that our pinpointer tool experienced significant growth post the IDFA changes. We all know a lot of companies suffer because of that. Unity was one of those companies that was well prepared, so it's a bit of an issue if something else goes wrong here. The second is that they lost the value of a portion of the data, not something you want to hear. That's training data, due in part to them ingesting bad data from a large customer. They estimate the impact to their business of approximately $110 million in 2022 with no carryover impact to 2023, so that's good to hear. Now let's be honest with ourselves. If this is a one-time thing and they can solve it by the next quarter or something like that, okay, fine. But if this is something that might happen again in the future and it takes them time to undo it, it's a bit of an issue. I don't know if you're an expert in this type of stuff. Maybe you can explain it down in the comments below. If you do, I'll pin it so everybody can read that. But fine, they'll take a $110 million hit for this year, but that won't go over to the next year. Now, some more good news actually, and that's with regards to profitability. So they said during the call that with revenue coming down for the year, there is of course an impact on their operating margins. This is not new to us today. While we believe Unity has massive opportunity in the future, we also think we can realize our vision with less spending. We have looked hard and can reduce our spending by over $100 million versus our internal plan. We believe this will make us a stronger company short and long term. These savings will not have much of an impact in our second quarter, but will have a substantial impact in the second half of the year, such that we believe we will achieve profitability in the fourth quarter of this year, which is sooner than previously communicated, and they expect to be profitable for the full year 2023. As a result of the slowdown, they expect non-GAAP operating loss in the second quarter between $62 and $64 million. Now, this is something you do want to hear. A company that is growing as fast as Unity in a huge market, giving us an extremely good opportunity to invest in that amazing market, suddenly tells us, look, we might be profitable already in the last quarter of this year, and they expect to be profitable for the full year next year. I mean, that's pretty good. And now a quick look at the overall situation, let's say, of the stock right now. So I'm here on stockcard.io. Again, if you want to follow this channel's portfolio, it's free. Link will be down in the description below. And I'm going to see at the end of this video if we're going to add Unity right now to our portfolio. Also, we might be having a competition soon, so you might want to sign up to the platform. All right, so Unity software, high growth potential, obviously. Struggling operations, that's because, well, they're not really profitable right now. But hey, they said they might be profitable soon. Pessimistic investor, the usual stuff. Underperformed the market. Well, obviously, look at the 1 year chart. It's down 51%. It's down approximately over 75% since their all-time highs or so. Now, it's actually a fairly priced stock after it had dropped so much. And as for the analyst consensus, you can see it here, 8 buy, 3 hold, and 1 sell. Today's price is, let's take $40. The analyst price target, the average one, is 84.65. So basically more than double today's price. So to me, the recent drop really gives you the opportunity to look at the business at today's prices with no real high valuation, especially not in the current market that they're in, and especially still at the growth rate that they're growing at. I think it's around 30% or so. Yes, granted, with the hit that they're having to take this year, it's a bit less, but overall 30% growth, pretty cool, pretty good. Now, if you want to support the channel, check out the link in the description to receive the top 10 best stocks to buy now, or visit fool.com/couch investor. All right, so let's have a look at the financial highlights for this quarter. So revenue was $320.1 million, an increase of 36% year over year. That also beat the estimates by just a little bit. Create Solutions grew 65% to $116.4 million. Operate Solutions grew 26% to $184 million. And then the smallest one, Strategic Partnerships, etc., grew 11% to $19.7 million. Now, Create obviously beat the estimates. Operate missed it. Now, as for basic and diluted non-GAAP net loss per share, that was 8 cents compared to basic and diluted non-GAAP from last year of 10 cents. That was in line with expectations. And then this number right here is always a good one to look at. So customers that generate more than $100,000 of revenue reach 1,083. That's up from 837 from last year. And that beat the estimates as well by just a little bit. As for DBNER or dollar-based net expansion rate, that was 135%, a little missed the expected 136.7%. As for non-GAAP gross profit, that came in at $244 million, and non-GAAP gross margin came in at 76%. A miss on that. They were expecting closer to 79%, but then again, we all know why that happened. Now, as for guidance, they expect revenue for next quarter to come between $290 and $295 million, representing growth of around 7% at the midpoint, and that's obviously lower than what the estimates were, but we know why that happened. For the full year, they're now guiding for growth between 22 and 28%, which will result in revenue of between $1.35 and $1.425 billion. And just to be clear, guidance here on everything, loss from operations, operating margins, etc., are all misses compared to the estimates. But other than that, to be honest, I'm pretty happy with this quarter, besides the huge issue that I mentioned at the start of this video. Again, if you skipped to this part of the video and you do have an answer on how everything works on the technical side, do write it down in the comments below. But overall, pretty happy. We also have some information with regards to digital twins. If you don't know what digital twins are, we've talked about that in Unity, in NVIDIA as well. Basically, let's say you have a factory or BMW or something like that, and you want to build a new one. But before you build a new one, you build a digital twin. You try out various things in the virtual world. That way you won't be able to harm real humans. You might make some simulations and then adapt and then make the real thing. So with regards to digital twins, they entered 2022 with nearly 3,000 customers in this space. Their digital twin customers are spending more time with them as they land and expand to drive tangible outcomes with real-time 3D across the enterprise. This quarter, they closed 34 deals above $100,000, up 126% year over year and up 13% quarter over quarter. Unity is being used in construction, commerce manufacturing, and advanced simulation, and much more. So for those that think this is just a gaming play, you could not be more wrong. They're seeing broad-based adoption of these tools from companies like Mercedes-Benz. Unity is partnering up with Mercedes to power the infotainment domain of a new operating system called MB.OS, MB Mercedes-Benz Operating System. It's a fully comprehensive architecture covering electric hardware as well as software, which will hit the road in 2024. It can be seen in the Vision EQXX prototype vehicle. And this is one of the reasons why I like investing in Unity. It doesn't just give you the gaming play, let's say. It gives you a play on everything that's AR, VR, and let's call it metaverse as well. Not just for gaming, but as we've seen, automotive, construction, you name it. To me, it's a great company. It's going to be a huge winner in the years to come. Obviously in the short term, some pain, but in the long term, a lot of gains. Now do share your thoughts down in the comments below. Have you been adding? Have you been buying? And yes, obviously we are going to add Unity to this channel's portfolio on stockcar.io. Link is down in the description and in the pinned comment. It's free to follow, so go have a look. Now, if you enjoy this type of videos, do leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button and watch those 2 videos right here that might be interesting. And I'll see you all in the next video. Bye bye.